Here we go.
We're
Good
live.
morning. How are you, Miguel?
Great. And you, John?
I'm excellent. I'm excellent. Thank you for joining us this morning. I am John Belitsky. I am a co-founder here at Atea. In the interest of disclosure, I am also part of the GP in a fund that I've entered into with Miguel, who has sucked me into the world of tequila and tequila as an alternative asset class. And in today's discussion, we're going to dive into what seduced me about this asset class, some of your really, really deep knowledge on the subject. We're going to learn about why this is such an interesting space for people to get invested in going forward and learn about some of the really peculiar dynamics of this market. So I'm joined today by Miguel Ortiz, CEO of House of Rare. Miguel, why don't you tell us a little bit about yourself and what House of Rare does?
Absolutely. Thanks, John. I just want to say hi to the Altea community. I'm proud to be a founder member there. And we're here on our first chat. I just want to add, if anyone has questions, feel free to write them down on the chat. And at the end of the conversation, we can have them answered, or we can have a separate chat. Miguel Ortiz, born and raised in Mexico City. I'm founder of House of Rare. House of Rare is a firm I've been working on for the past 3 years that I founded, and it only has to do with tequila. And we approach tequila in a different way, and that's it in a financial aspect. So basically what we're doing is encountering or looking for opportunities on investments in the tequila world. And the best way to start, and it's a very simple model that we kind of took from the wine and whiskey industry, who have been doing this for 30, 40 years already, is the aging process of tequila. So basically, the product we have right now is buying Blanco tequila from the best tequila producers out there in Mexico. Then we put that tequila into our private cellar and age it until it becomes añejo or extra añejo tequila, which then we can sell to different brands, celebrities, or people that want to bottle it. And we make a nice little profit out of that. So we've had a great traction last year, and we started strong this 2024. And we have a bunch of exciting products that we're launching this year. So it's a pleasure being here to tell you all about it. And John, so where should we start?
Yeah, well, I think the first place to start is to disambiguate between what you're doing and what George Clooney, for example, has done,
Yes.
which are vastly different approaches to this. I don't know that I would have any of the same interest in this asset class if we were approaching it from the perspective of a direct-to-consumer or a retail distribution channel type of an approach, which is incredibly complicated, incredibly capital intensive, and requires a whole different skill set and organization than what you're doing. And so I think what we should do is, why don't you tell people about this sort of commodities approach? It's sort of like a commodities play that is exploiting a mismatch between the timing of capital between producers and the retail market. So why don't you explain kind of where you sit in between those two and what exactly you're buying and what exactly your business does?
Absolutely. Yeah, no, like you said, we approach tequila investments in a very different way that you would think. We do not touch the retail world. Why? Because how can I compete with George Clooney, right? It's highly competitive. It's a booming industry, yeah, but there's so many brands out there and so many celebrities and sponsors that are just promoting brands that we don't touch that, right? And we actually thrive on that because the more tequila is sold in stores, the better we do. So yeah, like I said, so basically we have 3 different partners in the tequila world. They're family owned, still traditionally made tequila. That means this is the highest grade of tequila out there. We buy it Blanco. Blanco means that it's a tequila that hasn't been aged. It's fresh out of the distillery. And I'll get into the process of how tequila is made in a second. But we take that Blanco tequila and then we put it through an aging process, which makes it, well, it enhances the flavors, the taste, the smell, and then obviously it becomes a more valuable liquid. And like you said, I mean, maybe it's not a commodity, but it's we just go to the higher standard of tequila. and we just age it in a traditional way. So then when we need to exit, when we need to sell this tequila wholesale to these celebrities or someone else that wants to bottle it, they can just, mix it with their own stuff and create their own brand of tequila. So it's just about going all the way to the top in quality, no compromises, no additives, no bullshit. We just do 100% agave. I mean, you guys were there in the distilleries. It's a incredible process, and then we age it in a variety of different casks, which gives little different profiles. And at the end, what we're doing or what we want to build in the next couple of years is a nice catalog of different varieties of tequilas that we know will interest brands that will want to bottle it ultimately.
Okay, so let's break that down, which is what I like to do. I like to think of these things as the qualitative, operational, and financial components of what you do. Okay, so you kind of smash them all together. I want to pull those apart for a second.
Absolutely.
Let's talk about the financial first, right? Because this is an investment group, and I want people to really kind of understand the financial profile of what we're discussing. So the first thing is the George Clooney's of the world and the glut of people that are now racing to create their own brand. If you were making your own brand, if House of Rare was going to go on somebody's shelf in their liquor store, that would be a threat to House of Rare, and it would require additional capital to overcome the inertia of people's brand preferences for, George Clooney's brands and so forth, these celebrity brands. The way that you're approaching it, that's a driver of your revenue. We want more and more tequilas to be put on shelves. We want more and more demand for tequila. And that's in fact what we're seeing, right? We're seeing steady growth in this segment of spirits where there's more and more consumer demand for tequila. There's more and more celebrities making more and more higher quality tequilas that require more and more high quality liquid. And what I love about your business is none of those people make their own liquid. None of them.
That's correct. Yeah.
Right? So I think what you should do is take our community down this path. Where do they get their liquid? Where is the sort of the inflection points of the cost, either starting from the agave in the field and going back to the liquor store after George Clooney sells it to you, or starting with you buying it from George Clooney and going back to the field? Either way, explain to our viewers in our community here, what does that look like? What does that value creation look like step by step? What is that process, and where are you extracting that value and arbitraging value in some instances?
Yeah. So I'll start by saying that maybe not a lot of people know this, but tequila has a denomination of origin protection, a DOP. So that means tequila can only be made in a certain region of Mexico that's constricted to a certain state called Jalisco and little spots of other parts of Mexico. And that means, the supply is kind of limited. On top of that, there's only around 250 distilleries and with their licenses. And there's no more licenses going out there. So you either buy one of the distilleries with their license, which is extremely costly, as you can imagine, or what, brands or celebrities are doing is they approach one of these distilleries and they will get the liquid and the bottle and everything manufactured by them. And it's a very funny process because sometimes you don't realize, but maybe 10 or 12 brands that are on the shelf where you usually buy your tequila, it's the same liquid or almost the same. It's coming from the same factory. And a way for you to notice this is if you check on the label, there's this thing called NOM, and then it has a number. So you can compare the numbers. 1122 is Jose Cuervo. You'll find half of the shelf is Jose Cuervo. And then, as you start looking into more traditional stuff, you'll notice that they are single noms. And most likely the most flavorful ones are the ones that only have a brand and they, take more care about it. And tequila making is a magical process. It starts in the field. The agave plant is a desert plant. No, it's succulent. Yeah, that's a word in English. So it's a succulent derivative. It grows in the desert. The drier the year, the more sugars it produces. And ideally, you will need to grow the agave for at least 5 years. That means that your tequila, even if you take it Blanco, it has already been on the ground for 5 years, the agave plant, in order to produce something that's of quality. Some producers are even waiting 7 to 10 years for the agave to grow. And that's a topic I'm actually exploring with Wyatt and stuff. You're just talking about the fields, see how we can look into ways of investing in the fields. But that's a topic for another day because we're still not experts. But
let's actually start there. So let's keep this completely focused on the financial and none of the operational or qualitative components of it. So financially, you have a field. It has to be in the city of Tequila to be considered tequila. Otherwise,
the Tequila region, because it's
Tequila region, right? The region in Jalisco. Otherwise, it's mezcal. Period. It's not tequila unless it comes from tequila. So we have a supply constraint in the amount of land that can produce one agave plant, which takes 5 to 10 years to produce each plant. Okay. Yeah. So now, what does each one of those plants cost? Like, if you take an agave plant, and how much liquid does it yield? Each one of those plants.
So it depends on the weight. So the plant will weigh anything from 10 kilos to 30 kilos. And then to produce 1 liter of tequila, which is a little bit more than a bottle, you will require 8 kilos. So maybe a single plant is a single liter, or if you got something bigger, you can produce 3 liters out of each plant. So as you can imagine, it's very raw material intensive, and you need a lot of volume of agave to produce the liquid.
And this is all still being excavated by hand, right? There's no like modern.
That's a curiosity of the tequila world. Yeah, they haven't figured out how to dig out the agave from the field with a machine. So the jimadores, which are the people, the ranchers that harvest the agaves, they still do it by hand. First, they will cut off the leaves, and they're left with a core, which we call the piña or pineapple. And that's what you actually use for the tequila. It's super rich on sugars. And once it's cooked, it becomes a caramel where you can extract the liquid that eventually will become tequila.
Okay, so we have a 5 to 10 year old plant that is between 8 and 30 kilos, which cost, I think, by today's standards, something like $24 to $40 a kilo is approximately what these.
Pesos.
Pesos per kilo.
Yeah.
Okay, so
around that, I mean, let's average on $1 per kilo. It varies a lot. It's a cycle. Obviously, when the prices are very high, everybody starts planting, expecting it in 5 years to be the same. Then you have an oversupply of agave. The prices come down. People stop planting, and it's like a 3 to 5 year cycle on the pricing. But that doesn't affect the price of tequila, right? So when the agave plant is the kilo is high in price, they make less margin. When the plant is low, that's when they take their profit, when they really start filling up their war chest with some cash. And then the tequila prices have just steadily gone up for the past 12 years. And I don't see any producer, saying, "Oh, the agave now is cheaper. I'm gonna put down the price of tequila." Tequila is so popular, you don't need. It's not a price competition. It's more of a quality competition nowadays.
Right. So because of the land constraint to produce this, if you have that denomination, you can kind of call your price to some extent in the market as a distributor, retailer, manufacturer. And because there's only 250 licenses to actually produce the tequila, the demand for all of that agave is being controlled by these distilleries who are just not going to play ball. They're going to force basically the farmers to eat whatever the price is at that moment. There's some fluctuation, but the distilleries they're just not taking a haircut. So they end up getting this liquid and then barreling it. Now, at the point that they barrel it, there's 3 stages. Why don't you talk us through it? Just let's stay financial now. We now have basically $1 per kilo on the agave. We bring it, chop it up, pull it out of the ground 5 to 10 years later, mix it into this extract, add the yeast to it, start to ferment it. Now we have alcohol through this distilling process. Like we don't have to go through the whole distillation process, but we've distilled it. Now it's Blanco and it goes into a barrel. What's it worth now?
Yeah. So after all the production raw material, on average for traditionally made tequila, a wholesale market, we're looking anything between $18 to $35 per liter. the variables in here is the alcohol content of the liter. If it's 100% zero additives, and then obviously each brand will decide the final price for the wholesale. So then you take that. Let's imagine, for sake of argument, and that's my base price. We have $25 per liter. Then you take that liquid and you start the aging process. So normally, 90% of the tequila in the world is sold as Blanco. That's unaged, straight out of the distillery. And then some people do take the care of aging it and improving the liquid. And there's 3 vintages after the Blanco. So the first one is the Reposado, the one most people know. Actually, 10 years ago, that one was the most popular one. And that's a liquid that's been aged for 3 to 12 years. 3 to 12 months. And it gives it a little bit of oaky taste to it. It balances it out, takes out the edge of the agave, makes it a bit more mellow. And maybe, I'm talking average here, but maybe the price goes to $35 per liter in that part on the wholesale market. Then between 12 months and 36 months, the tequila becomes añejo, which is the second vintage of aging. This is a highly variable, space regarding price, but I've seen prices going from $55 to $80 per liter. Again, depending on many variables, but the prices start exponentially going up because you're getting less and less of this liquid. There's still demand for it. There's still distributors and retailers in the US and the world that want this kind of liquid. So, but it's just like, the constraints and the dynamics of the tequila world doesn't allow the distilleries to be aging that much. And then after 36 months, we go into the last vintage, which is extra añejo. So 36 months up to as long as you want to take it, extra añejo, highest vintage. And here you see a huge price jump. And now I'm going to go to the bottle part of instead of wholesale, I'm going to talk about bottles and what I've seen in the market. I've never seen an extra añejo bottle for less than 100, 120. And here I'm talking traditionally made. Obviously, if you go for the industrial made tequila, maybe you find something below that. But $100 and $120, that's where you start getting into the premium tequila, the top shelf stuff. But that's also the category that's growing the most in the US. Everybody's now used to paying $100 for something that's quality. They don't mind, they're gonna enjoy it. And so it starts from there and then goes up to $500, $600 for a bottle. And depending on the reputation of your distillery, marketing, and how fancy your bottle looks, well, then there's the range of 100 to 600 or even more.
Let's pause there for a second. So that's the qualitative piece. We'll get to that because that's gonna explain how you get to a real return on this over 5 years when you're selling into a retail distributor who's fetching $500 a bottle that started off as effectively $25 a bottle when it was 3 months old. We'll talk about how we get there, but let's keep this to the financial and then the operational. So we now have our price inflection points, right? So you start off with this, $1 a kilo plant. It's extracted, turned into a distilled product. Now you have a $25 a liter product, which is where you purchase it. You put it in this barrel, and then from the 3-month period to 12 is the first inflection point, right? Because that's our reposado period. Then from the 12-month period to the 36-month period, we have our añejo period. And then from there forward, we have our extra añejo period. And it's just sort of like this constant wild chart where it just keeps on going up the roller coaster, and it goes up and up and up from there because there's this limited supply of this liquid that exists. And so the first question I think an astute viewer is going to ask is, why is there a limited supply of these older liquids? Why does the supply of it become exponentially smaller as time goes by? And I guess one question that I would have is, can you store legally and still call it tequila and still have it regulated by the CRT, which is another regulatory layer here, not just that NOM that you described that explains where this thing came from, but the CRT, which is the governing body. It's like the SEC of tequila. Like it comes in there, and make sure that this is kosher. It's one of the most respected federal agencies in Mexico because of the value that it creates in tax revenue. Do they allow you to store that tequila that they produced in Tequila? Can you store that in Texas? Can you store that anywhere outside of Tequila and still maintain the CRT?
No, that's a great question. And actually, no. In order to abide with the DOP ruling and the CRT's ruling, everything in the process of the tequila, from plant to bottle, it needs to be made in the tequila region. So, and it's funny because CRT is what has allowed tequila to grow so exponentially around the world, and just to have this great reputation of what you pay is what you get. These guys are there in the field when you're harvesting. Then they come, check all the process of the distillation. They make sure everything's done according to rule. And then every time the liquid passes from vessel to vessel, so from the distilling pot to a container, to a barrel, to a bottle, they will be present. And they will be sealing the vessel every time the liquid changes. So they'll unseal the previous seal, see how you extract the liquid, and then put it, for example, from the pot, you take it to a barrel, there's going to be a CRT representative there. And then he'll take a sample from the barrel, take it to a repository they have in Guadalajara city, and then they'll seal the barrel. And this seal is just a little piece of paper that if it gets broken or altered, you will need to call the CRT, and they will compare the liquid inside the barrel to the liquid they have in their laboratory in Guadalajara. And if there's a mismatch or if there's any alterations, then the product is not tequila anymore. So they're really focused on making sure no one's adding water or sugars or something that's not disclosed on their tech sheet. And well, this is what gives me comfort, and knowing that my barrels are safe over there in tequila, that they're not going to touch it, because, if you touch it, you'll notice, the commission will notice, and then it just becomes something that's not called tequila. It's just a liquid.
I will say that when I visited your storage facility for House of Rare Spirits, you're a very mellow, amiable, nice guy. The most pissed off I've ever seen you is when I stepped on one of those CRT labels. I thought I was going to get shot because one of those tables over a barrel of tequila. It's a big deal.
Because if the seal breaks, it's not the end of the world, but you need to get the CRT representative and to reseal it. And it's a whole process, because he'll need to, like I said, draw a little bit of the liquid compared with what they have in the repository. Just make sure there has been no alterations, and then they seal it again. But it's just a bureaucratic process, I guess, if you break the seal.
Yeah, so there's 2 points I want to make on that, because I think this is also very important. First one is, if you're an investor outside of Mexico, you're probably saying, can I trust the CRT? And the thing that strikes me about the CRT is it is in the best interest of CRT and Mexico, the federal government, to never allow this organization to be corrupted, because it is safeguarding one of the largest pieces of intellectual property indigenous to Mexico. It is exported the world over. To the extent that that is ever corrupted, it diminishes the value across the board. It demolishes the tax revenue by damaging the value of these liquids. And of all the things that any government would mess around with, I think just structurally, this is probably one of the things that I can say confidently is going to maintain the highest level of integrity maybe in the entire country. Because firstly, it operates in a very small geographic region that's easy to police, which is tequila, right?
Yeah.
Secondly, it's safeguarding one of the primary exports of this country at this moment. Massive, massive, massive market that's only growing every single day.
Yeah.
It just seems to me like the kind of thing that investors can have. I mean, I have confidence in, at least.
Well, I mean, going back to George Clooney, he trusted $100 million into the industry, and that's greatly has to do with the CRT. And it's not only that it's, the government really pushes for it to be a proper institution. It's also it has compartments, so you cannot really change information, right? So even if the representative that comes is not there's nothing we can do. There's nothing you can do with the guy to change stuff, because he needs to take the sample back to Guadalajara, and then it goes to another person, another department, and then they do the testing, and then the seal comes from another guy. So it's done in a way that it works beautifully, and it doesn't allow for there to be any trickery or foul stuff in there.
Yep, I agree. Now, the thing that should be really interesting, especially to our real estate investors in this community, when you talk about supply constraint, first you have to be in this one little town, all right, this one little region of Mexico, right? You have to be in Jalisco. I guess there's one tiny little piece. There's a small plot of land near Texas as well where you could produce this, but it's sort of an outlier because it has the same species of agave. But you have to be in a very supply constrained area to qualify for this denomination, the same way you would in Champagne or Burgundy. So first you have to be there. Then you have to make it in this way that conforms with the requirements of CRT. Then you have to participate in the process of sealing it and having it stored in that region. And this region has a very small footprint.
Yeah.
So because of that very small footprint, and because these distilleries want control over this, and because they have to interface with the CRT regularly, it takes up space, valuable real estate inside of their operation that they dedicate to making more Blanco that has increasing more and more demand. And because there's more and more demand and there's less and less space to do this because of the production that is happening, they have a timing mismatch that House of Rare solves. And this is where the operational and the financial intersect.
Yes.
House of Rare comes in and says, okay, you need to get these barrels moved into the market because you need the cash to produce more of this Blanco to keep your flywheel spinning. And you're willing to do that at $1 a kilo for the plant, extracted and refined, $25 per liter coming out. You come in at $25 a liter, and in your view, you're saying in 3 to 5 years, I know that there's a forward market that retails in the $300 or $500 range, which means that they're paying approximately half of that wholesale, which means a $25 liter is now a $125 liter over 5 years. And so what you're doing is you're coming in saying, I will grab this, I will roll it out of your facility, store it outside of your distillery, seal it with the CRT, work with my partners to manage that process to make sure that every year CRT comes, extracts their sample, proves that it is unadulterated, registers this effectively on the blockchain, which has always been my interest in this, is that it's like the perfect Web3 blockchain-based product in my view. They maintain the integrity of this product over this 5-year period, and now you have a forward market you could sell into that by today's standard, not adjusting for any increase in the value of the tequila based on demand, not accounting for any increase in the value based on just inflation, is approximately a 5x projected wholesale based off of a retail market, right? If we're just dealing with that cross of people who want the best of the best. Now break that down, right? Now we're in the qualitative component where we're describing who's getting that, who's getting that type of money for their liquids 5 years forward, and why is it House of Rare? How does that work?
I mean, if you want to oversimplify what we're doing, we're basically a project finance for the distilleries, right? So we purchase, for example, if I produce a big batch with them, I'll give them $500,000 or $1 million upfront. They have sold the Blanco, so they take the revenue, and then in 3 years or 5 years, when they require the añejo, they will knock on my door and say, "Hey, Miguel, you still got those liters I sold you 3 years ago?" And I'll be like, "Yeah." And then the bidding and offer process starts. So we will get a benchmark pricing for those liters, and then we will ask around. And that's the point of going with the top quality tequila, that we can knock on a lot of doors, and there's going to be a lot of interest for our extra.
Which doors? Whose door are you knocking on?
So we're knocking on other distilleries that appreciate the quality of the liquid we're buying. We're knocking on brands and celebrities that want to do a special edition tequila. We keep our batches small. We normally will do 10 to 15,000 liters of tequila. That's a drop in the bucket of how much tequila is drunk in the world every year. So then a brand that's already commercially successful can come to us and just buy liquid that no one else has and they can put in a bottle, in a beautiful bottle, and promote it as a truly limited edition launch. Because I mean, limited edition, it's overused right now. I won't mention the brands, but they'll say it's limited edition, and they produce 500,000 liters of the stuff. Our stuff is truly limited edition. That creates more value for our investors and the people that are involved with us. And then it creates value for the brand that's buying the liquid from us, because they can actually put on the bottle, hey, there's only 2,000 of these bottles. There's only 3,000. We made it specially with House of Rare. And once it's gone, it's gone. And obviously, with the premiumization of tequila, this is exploding, and people are really loving limited edition stuff.
Before we go back,
sorry, John, popping in quickly. So yeah. I want to push on that just quickly. I was speaking with a buddy of mine, Miguel, who is fairly senior in trade finance in the U.S. about like surely it must exist within like traditional financial institutions and banks that there exists trade finance for tequila, because it's fairly mature within the wine, the whiskey, all that kind of stuff. Are there no actual banks and institutions that do this for tequila? Is it literally just the Bank of Miguel who does this?
No, absolutely. There's that, but they'll rather use their leverage and the debt they get out of the banks into machinery, into buying more land. They don't like to put the money into their warehouse. So with me, it's an option, right? They don't have a first right of refusal. They don't have a credit that they need to be paying interest. It's a thing like they get the revenue from me. Now I'm the owner of the liquid. And then in 3 years, we have a conversation. If they require the extra añejo, then they buy it back. If not, they didn't take an encumbrance for taking the liquid into the.
It's worthwhile to note that Miguel has a background in banking. I know this obviously because Miguel, over the past several years, has become a close friend. And this is, in my view, a specialty factoring business. And this factoring business is really, really, really interesting to me because it strikes at like the heart of a very, very, very peculiar problem that these distilleries have. They need working capital. They can go to banks and get loans that they could use for this, but that doesn't solve the real problem that they have, which is they probably want this liquid in 3 to 5 years. The people that we're buying from, that Miguel is buying from, are the people that Miguel is selling to. So he's taking possession of this collateral. He's maintaining the CRT on it through them, usually as partners, to make sure that this thing is still a product that can be sold at the exact same price and standards into a forward market. It sits right there in their town where they're manufacturing. They know that this is true, and they know that this isn't being gamed, so that they know that they're safeguarding this asset until they use it later. And then they have this relationship with their lender, which is Miguel, to purchase it back. And it's already there. Oftentimes it's already in their facility. So they change title for this asset by paying Miguel for it, grab the hose, pull it out, start bottling it. And they have absolutely no downtime. There's absolutely no bureaucratic layer that causes transit issues operationally. It doesn't increase their cost of doing business. Those costs of doing business that are invisible in financing, they understand and they feel deeply. And so that's what kind of positions Miguel as this really bespoke factor in this space that they can trust, that has relationships in this market, that keeps this product where it is, that maintains the registration on it, and has a zero friction, zero time, zero cost ability to revert the liquid back to them so that they could sell it through to their partners, which I just find that whole thing absolutely fascinating. That's always been my fascination with what you're doing, Miguel. And I think now we can start talking about qualitatively what this actually means, because in addition to sort of innovating across the sort of supply chain and financing spectrum and solving that major pain point, this last piece of it, which is really interesting, which is what informs that retail $300, $500 bottle retail, $200 bottle retail, which in turn informs that $100, $125, $200, $250 a bottle wholesale price, is what you're doing to the actual liquid. And I see, behind you some very familiar bottles that I've tasted over the past several years that have blown me away. And I think I see some vials on your right shoulder there, which I think you gave me when we were in Mexico recently. Why don't you tell us a little bit about what's happening there?
Well, yeah, I mean, this is a little vial shelf we have, and it's just to demonstrate how the tequila is evolving throughout the years. No, the Blanco, then the Reposado, then Añejo, and then Extra Añejo, and then the bottles you see behind me.
Wait, hold on a second. Really... Pull that back 1 second, Miguel. Let's just start with something visual. I think this will help people understand what's happening here. So, what are we seeing here? These are different colors, right?
Yeah. So we got the Blanco, then Reposado, which starts getting a little bit more yellow. Then we have Añejo, and then we have the 3-year-old Extra Añejo, which you cannot notice that much the change in color, maybe because of the light. But then I'm gonna show you a 7-year-old Añejo, and that's where you really start seeing the change in color.
Wow.
So this would be a 7-year-old. This is the liquid that got me started into the industry and what really made me passionate about tequila. This is actually a cask I bought 3 years ago. It's a family reserve cask that I found by chance. They didn't want to sell it to me. I insisted so much. They were like, okay, let's do it. And it just really showed me like how beautiful and tasteful and complex a tequila can become after just 7 years in the bottle. This liquid has been compared to fine cognacs or even 30-year-old whiskeys. And
well, let me look a bit closer. Let's take a closer look at that label. What's going on here? So this is the bottle that got me hooked on House of Rare, frankly.
Yeah.
This is the bottle. This was my introduction to you. I met you in Miami. You showed up with cigars and this bottle, and surprise, I liked you. And so this is how our friendship and my interest in this business started. Tell us about what that is. Like, what is this bottle? Tell them what they're looking at.
So this is, we did 177 bottles of this Extra Añejo. So it was a single cask, 7-year-olds aged in French oak. And it's just a super special liquid. And then because we found the super special liquid, we found a very special bottle. This is handmade crystal in Mexico. We put a silver agave in there, and then we numbered the bottles and sold them with these beautiful box sets you see back here. We had collaboration from more than 20 Mexican artists. And that's what got me into the tequila industry. And that's what got me realizing the shortage there is for these more premium aged for more than 5 to 7 years liquids. And I mean, I'm also a whiskey collector, and I can say, although the taste is different, the complexity and the nuances you get from a 7-year-old or a 10-year-old tequila can compare to 30 years old Scotch. So this really made me get into the industry at full. We're getting a lot of expertise around the wood we utilize to age our tequila. We also, have conversations with different distilleries, see what we can do with the liquid before it's put in the barrels. And it's just with the intention to build a catalog of really special stuff that can give the people that invest with us, an upside, not than just a traditional, hey, let's buy a cask of whatever generic stuff. This is premium stuff. And we're always going for the upside, and we're always looking on creative ways of getting it out there, partnering up with really cool brands and celebrities so we can get it out there and be a special liquid that people will really appreciate.
So is that bottle indicative of your strategy? Because I know that bottle of tequila to be your foray into doing this. I also know, how much does that bottle of tequila go for today if I tried to buy that bottle from someone?
Well, the last one I sold is $3,000. Yeah.
Per bottle.
Per bottle, yeah. So we started at 500 when we had 177, and then in 3 years, the less I have in my warehouse, the more I put the price up. And then when people try it, they really appreciate it. Actually, the last two were sold to the Mexico Whiskey Club, and they thought $3,000 per bottle was a fair price. So we sold them. It obviously includes a beautiful box set and everything. And now we only have like 7 bottles left. So I don't even know if I'm going to sell them. I think I'm going to keep them for myself and wait for some of our barrels to arrive at 7 years old.
I was at one of my partner's house last week, and he pulled out one of those bottles completely unopened. He won't open it. He's torn. He's like, I want to drink it, but I also realize this might be like Bitcoin in a bottle, and he's not wanting to break the seal, so to speak. So
yeah, I wouldn't.
he hasn't. I don't think he's gonna. It's Dan. I mean, you know Dan.
Yeah.
So okay, so here's my question, right? Is that part of the going forward business plan? How does that retail bottle factor into this? Because your core business, the fund, the thing that I'm doing with you, the thing that I find most interesting is really a financial operation.
Yeah.
That warehouses these things, and that's why I use the term commodity. You're solving a financing mismatch and a very, very, very peculiar, bespoke problem set for distilleries that you have a relationship with in that area.
Yeah.
What does that have to do with the bottle that you just showed us? That's not part of the fund. What is that?
Yeah. So okay, when we started doing the barrels, it was very clear cut, right? We buy the Blanco, store it for 3 years, and then we have the wholesale bid and offer market is there, right? That's gonna be there. It's gonna stay there. And now, as we evolve, as we lay more barrels down in our cellar, we're finding more creative ways to exit that maybe can give us a bit more upside. So, talking to brands, talking to people that maybe want to bottle it, to want to do a special edition. We're also talking to a coconut water brand, for example, that want to put extra añejo into this really tasty concoction of coconut water with tequila. So, no, although the exit is already there, we're looking for more exits and more upside. And we're every day, just because we love the industry, we're chatting with everyone and just making sure this liquid we're producing that we're very proud of ends up in the best hands and ultimately in the consumer's hands that's going to appreciate it for what it is and not just a show-off bottle that was super expensive, but they actually can taste it and enjoy it and, appreciate the liquid and the history it has, no? Because, 5 years for it to become Blanco, no, on the fields, then you need 5 more years in the cellar for it to become like a very nice extra añejo. And then, it's at least 10 years before you get the liquid in your hands. So we want people that appreciate that quality, and that's the people we're partnering up with to make sure it gets bottled and it gets out there in the proper way.
Great. So, we're almost 3/4 of an hour into this.
Yeah.
Let's put a button on this. Let's wrap this up. I'm just going to give you some of my thoughts, and then maybe you can take us out with your thoughts for people who are interested in this alternative asset class. From my perspective, what has always interested me in what you're doing is firstly, you as an entrepreneur, as a founder, have unbelievable knowledge and relationships that I've seen firsthand traveling through Mexico with you inside of the space. And the space is a land-constrained, highly regulated industry that deals with some extremely regulated inputs in the form of where you can actually produce and store this, but then the output, which is equally highly regulated, which is alcohol, just like one of the most regulated products in the world. And so there's a tremendous amount of eyes on this, a tremendous amount of government involvement. And those regulations create an opportunity that is unique if you can get into that market, make relationships, and solve a critical problem, which is a cash flow mismatch problem that you've expertly solved by introducing the idea of maintaining the liquid on premises for your client who you're effectively factoring, who's ostensibly going to buy it from you most of the time. And in the event that they don't buy it, or in the event that there is a greater opportunity for you to make money elsewhere, you've created these downstream relationships with people who are bottling this, either in their own right, the George Clooney's of the world, the Constellation brands and so forth, the Diageo's, or even some of these ready-to-drink startups that are doing things like the Cocoa Water play that you described. And so there's multiple different exits at a pretty substantially higher price than your input in a highly regulated industry that requires really good relationships on the ground and understanding space to navigate. So that is my summary of why what you're doing is interesting to me. And then the asset class itself is interesting to me because if you look at the demand for tequila, it is one of the fastest growing spirits in the world, maybe second only to mezcal. which is slightly less regulated.
Yeah, I mean, growth in percentage, mezcal is way higher. Growth in actual dollars, tequila is the king. And it's actually, I mean, we expect it to become the most consumed liquid, well, spirit in the world by 2025. So it's going to even surpass vodka, which is the mostly drunk right now. And that's huge. I mean, and it's even bigger because, like you said, it's a limited supply. There's so much tequila you can make because it's constrained. It's like champagne. And but I think, John, why don't we jump, just for time's sake, why don't we tell the Altea crew, our accredited investors, how they can get involved, the things we're building, the fund, and should we start with that?
Yes. Why don't you take us into Rare Cask Uno, which is a $5 million fund. Take us into it, please, Miguel.
So after developing the barrel investment thesis for more than a year and a half now, and laying down a bunch of barrels, we decided to go into the accredited investors segment, and we created, like John said, a $5 million diversified portfolio of tequila and whiskey barrels. Why whiskey? Well, we just wanted to diversify a little bit. Our partners are experts in the whiskey industry. They've been doing it for more than 20 years. So we just felt confident of partnering up with them, choosing a portfolio that's part tequila, part whiskey, and part some like a rare and old whiskey barrel, and then putting it together and making securities out of it. So it's going to be offered through the Reg D 506B regulation, which means we will be selling securities of this portfolio. And John is part of our GP, as he mentioned at the beginning of the call. We're just launching. We've been working on this hard for the past 6 months, talking to lawyers, accountant, to the SEC, making sure everything's up to speed. And we're starting to take checks now. It's super exciting. We think it's going to fill out very quickly. It's our pilot fund. And if you want to get involved, if you have any questions, the Altea community is the first ones we're going to start speaking with. And we expect it to be a very fun asset class, but also a profitable one.
Yeah, I expect it to be quite profitable. Look, this is not a 100x opportunity. We don't think. It's not designed to be that. But based on these market dynamics that we laid out, again, this has always been my interest in the space. It seems structurally capable of pushing off consistent, really respectable yield. I think that, we've described that in the SEC filings as something that happens in like the mid-20s, sort of space in terms of the IRR on this project, over what we think is probably a 5-year hold period.
Yeah.
I find that to be quite respectable. I think that is probably conservative, maybe, I don't know. But it's
so we definitely took a conservative approach, and it's up to our accredited investors to read the PPM and get acquainted with the structure of the portfolio. But basically, we're in the mid-20s return. That's what we're filing for. That's the IRR we expect, and it's just a mix for. Sorry, John. Yeah.
Annual. Just
annualized. Yes, that's correct. So it's a portfolio that it's very simple. We buy the barrels on the first 6 months of operation, then we hold them for at least 3 years, and then from year 3 to 6, we start divesting, and we just find opportunities where we can make the most out of the exit, and then we start cash flowing the portfolio. So this portfolio, it's a 5-year hold, 6-year hold, but we will start cash flowing at year 3 as we start divesting the assets. And so we expect the tequila to go out first. Then we're going to have the whiskey, the new field whiskey, as they call it. So this is freshly barreled whiskey in Bourbon, Ireland, and Scotch. And then the cherry on top. And this is where things can go very interesting. And I'm actually excited to be there in 5 years. We have a single cask of Macallan 1988. This is an extremely rare asset that could become priceless. So right now it's 35 years old. And by the end of the fund, it's going to be 40. And that means it's going to be auctionable in one of the big houses. So we can take it to Sotheby's or any other of the big houses. And at the end of the fund, that's how we close the fund. We do an auction. We invite total investors and try to get as much return on that piece of asset as we can. And it's a fun exercise, right? I mean, who doesn't want to be there and maybe bid on the asset, on the last asset contained in the portfolio?
Yeah, the inclusion of the 1988 Macallan's Hogshead is very interesting. Who knows what that'll be worth in 5 years? But this is a barrel that is worth substantially more than $1 million today, and we think is a great base, a foundation for this investment, for this fund. There's a limited amount that we could say because this is a regulated security that is filed with the SEC, and so I think it's appropriate to tell people that if they want to learn more and you're an accredited investor, then you should reach out to Miguel directly, or if you want, you can reach out to me and I can put you in contact with Miguel to discuss it further. But I find the opportunity fascinating. That's why I'm involved with it. I didn't need to do this, but I just felt compelled to. Miguel really sucked me into this world. I have to tell you, it's been a fascinating journey. It's been a delicious journey. And one of the things I really like about it is, in real estate, we'll put together an IRR, and it's painful to even look at on the pro forma, because it's like, are you really selling in 5 years? Like, how do you know what your exit is in 5 years? What are you basing this off of? And a lot of that is a really loose projections. In this case, we're not selling in under 3 because the legal description of the product that we sell begins in year 3. We're not going to sell it until we have an añejo, because that's where that sort of roller coaster verticality in the value of this begins. And that's when we start to look to offload it and start to harvest some of the yield that we've accrued by simply not selling and allowing the supply of this product to diminish greatly. And so to me, structurally, that's a really compelling narrative, a really compelling profile of an investment, because we should get some liquidity on this liquid around year 3 when we start to see that appreciation, but definitely not before. We're just not going to do it unless there's some massive tectonic shift in market dynamics. It wouldn't make sense for us. And so you should think about that as well. If you're an investor who thinks that this is something that you want to trade in a year or 2 or 2.5, this is probably not for you. This is not that type of an investment. If you're an investor that wants 100x on your money in 3 to 5 years, this is probably not for you. This is not likely that type of investment. It's not what we're profiling here. But if the structure and the dynamics that I described are of interest to you, you should probably reach out. We'd love to have a conversation and tell you more about it. And I think from here, Miguel, why don't you take us out? We could put a pin on this, and we can look forward to speaking with this community further.
So thanks so much, Altea. Again, proud founding member here. I think what Wyatt and Stefan are building is fantastic. I just want to thank them for all their attentions. And please reach out. Even if you're just curious, we're here to help. We're here to answer any questions. This is my favorite alternative asset, as you can tell, and hopefully we make it yours. And that's why we're here, because we're curious about alternative investments and what we can do together about them. Thank you so much.
Miguel, thank you so much for your time. Have a good day over there in Mexico City. Enjoy yourself. Drink some of that great tequila. Eat some of that great food. And I will see you soon, my friend.
Bye. Ciao. Thank you.
Ciao, ciao.
Hey, Miguel. Looks like John's gone.
Yeah. He just jumped off.
Yeah.